Let's talk about Titan. That reported an inline set of numbers when it comes to the second quarter, and the street was anticipating that as well because the company had given their second quarter update. Jewellery margins, that came in at closer to 11% versus 8.7%, as the studded ratio was virtually unchanged as well at 34%. So to discuss this and more importantly, what the outlook for the second half of this year is, which for jewellery players is typically the business end. We have with us Ashok Sonthalia, who's the Chief Financial Officer at the company, joining in. Thanks a lot, Mr. Sonthalia, for joining in. A quick two-part question. One, from the highs, gold price has seen a bit of a reduction. Has that translated into better demand for you in the third quarter so far? First half, jewellery revenue has grown by about 18%, margins at around 11.5%. What's your prognosis for the second half, and as a result of which the full part of the year?
Thank you, Mangalam. I think we saw good traction during festive period, and which is continuing after Diwali also. So for last 10 days, looks like wedding season is kicking in, and maybe a minor correction, I would say, is about 5-6% in gold prices have also helped the sentiment. So looks like quarter three is certainly going to be better than what we have done in H1, and so overall, year visibility on the growth closer, is kind of improving for sure.
So closer to 20% growth in the jewellery business for the full year. First half, you've done 18%, and margins between 11 to 12% or between 10 to 11%?
We have been talking about 11 to 11.5 and trying to deliver that. But with the rising gold prices, it is becoming kind of increasingly difficult, while we are doing a lot of things to offset and some of the things which can compensate that pressure, but very difficult to kind of predict at this point of time. I would still say ballpark 11% plus minus something would be more a realistic number to look at.
All right. And how have volumes panned out? Because typically when gold prices are up 52%, a large part of the growth is value-driven. We've seen a decline in the number of buyers as well. So if you could give us a sense on how volumes have panned out, was there a negative impact out there, or was it as flat as last year?
The numbers are yet to come for the industry, but I would imagine volumes are down. For us, certainly it is down. We treat volume as number of customer as a much better volume proxy than the kgs and tons of gold. And that we have been talking about, that in the gold jewelry segment, it has been negative. While in the festive, that thing has undergone a change, and a lot of fence sitter, a lot of customers who were waiting, they have kind of jumped in during festive season, and that volume has improved. But on the diamond jewelry side, we are seeing a better number as far as the buyer growth.
Just a follow-up on the third quarter. You said you are setting up yourself fairly well for the festive season. Demand increased post-Diwali as well. So far in the third quarter, could you give us a sense how much have revenues grown by as compared to same time last period?
No, we will not able to exactly give a call out on that, but we are...
You can give us a broad range, right? 18% is the first half. Have you seen 20-25% sort of growth?
It's slightly better than that, but we are delighted with the performance.
Okay, over 25%, and you're delighted with it.
Mr. Sonthalia, just to finish that point, good morning, Prashant here. Both in kgs and number of customers, can you give us both numbers? What was the figure year on year?
On gold jewelry customer, I think we were down, if you take out coins, because if you include coins, then I think it was -1%, -2%. But if you take out coin, then it was close to 10% minus. And in the diamond jewelry, it was +3 to 4%.
Okay, and the number? This is the volume, kg volume.
This is the buyer growth.
Buyer.
We don't report volume growth, Prashant, but it would be easily -8, 9% or 10%.
So both minus 8, 10% essentially. Yeah. Something similar year-on-year numbers, right?
Yeah.
Okay.
All right. Hi, Mr. Sonthalia. Good to have you on the show, sir. I want to talk about a very, very small part of your business, actually, the eyewear part of your business. What is your expectation on the eye care part of the business? And I asked you this in light of the Lenskart IPO. Do you see a big scaling up of the opportunity out there on eye care? Because that could add a substantial amount to your SOTP as well. So plans to scale up, and maybe, longer term, 3-5 years down the line, where do you see the revenue headed? Because that could be another big unlocking opportunity for your shareholders. Please go ahead.
So irrespective of while Lenskart IPO has brought attention to this segment, but irrespective of that, we have always been maintaining that it's a good opportunity, large opportunity in India from the market size point of view, as well as lot of customers who are either unaware that they need, the sight correction, vision correction. And this is a category where vision and fashion come very well. And I think Titan is well placed to address that. We have been kind of working towards that. Some of the strategy shift which happened, I would say 6-7 quarters back, we are getting good results, mid double digit kind of growth number, except in quarter 2, where this was the only category in our portfolio which got slightly impacted with the GST announcement.
But
On 5th September, GST got announced
if
from 12 to 5%, and yeah.
so it's still very small, sir. It's doing 200 crores per quarter. You know, obviously, as you're saying, there's a big potential out there. Lenskart valuations aside, but there could be a big opportunity. So, say in the next 2 years, how do you see the annual revenue shape up from ballpark around 800 crores right now? Where do you see it headed?
So, one thing which also you should, the 800 crore is NSV. The customer price, if you think it is about 1300 crore, because we realize there is some confusion on the comparison of our number with the rest of the industry and rest of the market. So 1300 crore, we definitely believe that mid-teen to high-teen growth rate are possible. But opportunities are even slightly bigger than that.
But what stopped you from being that scale? Because, I was looking at the Lenskart Red Herring prospectus, and they're 2.5 times you. You coming from a much cash-rich, better distribution footprint, a fairly strong, recognized brand as well, which enjoys a fair amount of customer trust, which in an industry like eyewear in particular, you should have had the right to win and perhaps be the market leader here, right? Do you believe that you were slower in expanding this business than some of your peers, and now you will focus a little more here as well?
I think while on hindsight, some of the things can be, of course, we were slower in the sense that we were focusing more on care and perhaps ignored the fashion aspect a little bit, where the youth segment got drawn towards the other players, and we were serving mostly the serious consumers who were focusing more on the care part of the vision, and the progressive, the 40 plus people, 35 plus people. Titan Eye Plus has been kind of a preferred choice when they think about the quality of eye care. We are now changing and shifting that, because there is a large segment sitting below that, from the age point of view and volume of customer point of view. So I think we are bringing fashion and vision now together, multi-brand destination, making Titan Eye Plus and upgrading it from the premium aspect of it. So I think we will have our share of growth and our share of profitability. We have been running also a little bit more disciplined manner. One can comment on that our business has been substantially and sustainably profitable. That's the philosophy normally we have in Titan, but I'm not saying growth can ever be ignored. So growth is a primary anchor.
Now, just a bunch of quick questions, if you could give us quick answers for that one as well. Watch margins between 18 to 20% sustainable?
For eye care or
for watches?
Watches, I would say 16% plus minus is much better number to look at it, and it will gradually gravitate towards that.
And target growth for Taneira, fashion accessories as well as fragrances?
They are very small businesses. The fragrances and women's bag are already delivering in excess of 40, 50, 60% kind of on a small base. Taneira has been, we are still, I would say, while the value proposition, the product we have found, the supply chain and Weaver Sala we have done, but the clear click on the where the customer gets drawn and footfall goes up, we have stopped expansion of our network, if you would have realized from our number for last 3-4 quarters, because we want to get our proposition and customer value proposition right before expanding it further. So like to like, it had grown 17-20%, but because 1 or 2 stores got closed down, etc. So whatever headline number you see, I think we have a good story in Taneira. We need to tell it better and get customer hooked onto it.
And market share 10% by when?
Very difficult to say at this point of time. We will first make our proposition successful and then talk about mid to long-term targets.
Okay, all right, Mr. Sonthalia, I have more questions, but out of time today, and hope you can join us mid-quarter, and we'll stock more. Thank you very much, and good luck.